Bank of America earnings just crossing. We want to get over right now to Wilfred Frost, who has the numbers. Good morning to you, Wilf.
Good morning, Andrew. So it's a nice little beat, not quite as big a beat as we saw yesterday from the likes of JP Morgan. Revenue 22.5 versus 22.2 expectation. EPS came in at 74 cents per share, expectation of 68. Let's get straight to the fixed income trading area, which was the massive part of the beat for JP Morgan yesterday. Bank of America only has a slight beat, and it's a slightly smaller part of the pie overall. 1.8 billion the revenue there for fixed income trading. Expectation was 1.7 billion. And actually, equity trading was a little soft, 1 billion versus expectation of 1.1 billion. That's probably the biggest gap compared to JP Morgan's quite significant beat yesterday. If we go to the more core part of the business, the interest rate affected areas, net interest income holding up nicely like the others, 12.3 billion. Expectation was 12.1 billion, though the way it has held up is a little bit different from yesterday. The net interest margin has been pressured more than the others, down 7 basis points quarter on quarter to 2.35%. That is sort of in line with expectations for them, but didn't get a surprise like the others did yesterday, though loan growth was stronger than the others yesterday, so offset that for that net interest income number that I just gave you. Loan growth coming in about 6% overall, quite clearly stronger than some of the others. Expenses, always an important part for them. In line rather than beating. For a lot of the last couple of years, they've continued to cut expenses. They were, in fact, up fractionally year over year to 13.2 billion. So the efficiency ratio at 59%, fractionally ahead of expectation of 58.8%. And their return on tangible common equity 15.5%, right in the middle there of JP Morgan's at 17% for the quarter and Citigroup's at 12% for the quarter. It's up a little bit, 0.6% or so. It was up about 0.7% yesterday. So kind of similar now. Week-to-date gains as the others had yesterday. Not quite as big a beat as JP Morgan's and Citi's, but still relative to expectations for the earnings season as a whole was a nice little beat. Guys.
Okay. Hey, Wilf, real quickly, did they say anything about the health of the consumer? Yesterday, Jamie Dimon said the U.S. consumer does look like it's in very good shape.
So Chairman and CEO Brian Moynihan saying, in a steadily growing economy marked by solid client activity, our teammates produced another strong quarter. That's just scanning slightly what he said there. In general, in terms of the numbers, very clear, strong credit quality still. There's no issues there, and that was definitely a theme of all the earnings calls yesterday, and decent loan growth still coming through. So the snapshot takeaway is there's nothing to worry about there. And of course, the takeaway from yesterday for the other earnings calls as well was that the corporate picked up in Q4, particularly the latter half of Q4, and that drove increased activity. Wealth management as well, obviously that helps because the economy's picked up, markets have picked up, and you get better fee income from that. So I haven't got the full comments. Obviously, we'll listen on the earnings call about what he says specifically about the consumer, but seems like a nice, healthy economy playing out in these numbers too.